Public markets are very finicky, but they love integrity and truth. We are still at levels the US was seeing in 2005 in terms of net retail participation. So we have a long way to go. I feel that a lot more money will come into mutual funds simply because they are the easiest way for you to invest in a diversified portfolio. When I went to college, I didn't know what I wanted to do. My father had told me, if you want to start a company, you should start it early in your life. I left it because I had to fire myself as the CEO.
Yeah.
Because I was like, I'm holding this company back. But somewhere in the middle, I met Nithin from Zerodha, and he had showed me these charts. And the first thing that I realized in my first company was that I hate to create something that's a zombie company.
Yeah.
And I think the India saving rate was way too high.
Yeah.
They don't tell you that.
Yeah.
That we are the ridiculous savings rate of 38%.
Yeah.
Domestic consumption drives domestic investment. But India is actually starting the journey of going from saving to consumption. Yeah. So the idea over here is focus on the consumption elements that are changing rapidly. A non-consumption oriented economy creates rich families. Consumption-oriented economy creates rich people. Because credit has always been a huge part of the Indian economy, except it's been catch-up. India imports almost everything and makes almost nothing.
All right, good evening, Deepak, and welcome to That One Idea. We're running season 4, and this year's theme is what we're saying the encore entrepreneur or the corporate rebels, and folks who have been persistent, resilient, and have been what we say lifelong entrepreneurs. So, welcome.
Thanks, Anjali. Thanks for glorifying. I feel good when you say it. It's just like I just keep thinking of myself. I'm just too headstrong to stop. I just keep going, and sometimes some things work out. Thanks a lot.
So really, That One Idea is about, I would say, unraveling the backstory to starting up, and also maybe de-glamorizing entrepreneurship. You're born and raised in Bangalore, so OG Bangalorean, I would say, and tell us from your NIT, engineering days. I know we've had one more engineer who's ended up not using their engineering degree like the millions we have. But take us through your time engineering and your first few years, I would say, like working a proper, regular corporate job. And then let's segue into how you got into financial services.
Awesome. Yeah, it's been a while. I think the problem with backstories is you tend to glorify the rise more. I always knew this is what I wanted to do and all that. The answer is no, I did not always know what I wanted to do, and I stumbled upon even computer engineering by accident. I studied in Bangalore, my 11th year, though, as you say, I'm OG Bangalorean by family, but I grew up most of, in my 10th standard, I was in Delhi. Though I came to Bangalore after that, learned Kannada through the this process and all that. But an interesting part of this was when I went to college, I didn't know what I wanted to do. It was, I think, when I was introduced to computers, we had these legendary stories of people saying, I had to kind of move every byte physically from one memory cell to the other, that kind of stuff, because we had like, 10 megahertz computer or something like that, or 10 gigahertz, not in megahertz, kilohertz, I don't know, at some whatever level it was. And discovered computer engineering at that time and found I loved it. I allowed to create stuff and all that. So after somewhere in the middle, I said I have to be an entrepreneur. Simply because I was enamored by it. My family is a family of bankers. So not many entrepreneurs, and really a lot of people who had tried their hand at entrepreneurship had failed. So to that extent, it was considered not so great to actually start companies and all that. But I was keen. My father had told me, if you want to start a company, you should start it early in your life. Because afterwards you'll get stuck. Fail fast. And, so otherwise you're going to get happy with a salary and all. And it took me a while to figure out, because I had to decide whether I want to go to the US and do an education, because that was the thing. If you are not going to the US to do your GRE and whatever and all that, were you really human at that point? So you had to give CAT and do an MBA. So my position was I want to be an entrepreneur. And then my roommate told me at that time, you should use your engineering degree. I said, I should use my engineering. I wrote all these, I wrote the GRE, I had transcripts, I was going to apply. I was even in the US. I was working with this company called well, now it's called Emphasis,
Yeah.
but it was BFL at the time. And BFL Software was a tiny company in BTM level.
Yeah.
There was, I remember, still traffic jams then. This is
Wow.
1996, and I used to. I was sent to the US on an assignment, and they wanted to sponsor me for an H1B visa, and two things happened. My father passed away then, and I realized during that time and post his death that I really want to start a company. And I realized when I went to the US that you can't start a company. In fact, my dad told me this, you know, you can't start a company when you're in an H1B visa because it's like not allowed. It's, you know,
The visa is
so
linked to the
this is
employment.
the employment, so you can't do these things. So I was like, dude, what the hell? I mean, this is like indentured service at this point, right? Yeah, many people may have done their great things on it, but honestly, it's like you don't allow me the freedom to grow. So I came back here and I said, I'm not going back. So I canceled out on that part. And a year later, though, I worked for another company where I thought I was going to be um, a stakeholder in terms of a serious shareholder, but I wasn't, it turned out, because I had no idea that you had to agree to actually own shares before you decided that you were a founder or whatever.
Yeah.
And then the next company we said, okay, we're going to do everything from scratch. And we started this company called Agni Software, four of us. We didn't know what we were going to do. So we had a list of people that we would contact. You know. So the top of the list was like 7 or 8 contenders, and the last ninth one was a Norwegian school teacher.
Yeah.
And
were these like customers or
no, these were
people who
potential
wanted-
customers.
potential
People who
customers?
said they'll give us business and all
Okay.
that. The top
And
of the
what were
list
you
was-
selling at Agni Software?
So there were two things. There was a certain software called Delphi.
Okay,
which we were, very good at it, all of us. We said we do India services and product development for India in Delhi. So people want to build these products, we could build it all of them. We had a reasonably sized, Delhi population in India.
Yeah.
But we started a Delphi Europe, and I was already trying to make articles and publish them online and all that. What happened with the other part? That we were getting accounting software. They said, you want a big tally and then get, but we want to do more than tally, so we did tally. So two of us, two of the four, we focused on the Indian business. So we tally and related. Called financial accounting. And then we have two of us, the other two of us were looking at funding this product by using our process to get more contracts from Norway, from the US, or whatever. So the 9 month business was the Norwegian school teacher, there was an Australian something. Way down the list, the top of the list was something called Street Authority Company. We don't get a contract.
Yeah.
We did get a contract from Street Authority.
Yeah.
And we got a contract from the Norwegian school.
Yeah.
Norwegian school teacher, the Norwegian project eventually ended up being a 5 year massive product, which gave us huge amount of revenue. The idea was, I mean, so I started off with this, and I went to Norway. I was in Norway on and off for like 2 years, going and coming out, going and coming out. And you know what we ended up doing over there was helping these guys build a software product in Norwegian. Though they wanted certain services which were specific, it was more difficult for them to get. You know, in business, the hard way, because till then I didn't know how much should you build, how should you price your product. You learn this in MBA. Okay? But in reality, you're like almost like you price something.
Theory in MBA,
And then,
but yeah.
yes, and then you kind of come back and say, I only earn this much money, but I spend this much money. How does this even work? So I have to increase my prices. So you kind of work this out. Over a period of time, we figured out that people are willing to pay more. So your pricing is not related to your cost as much as it is willing to
The market, what the
market's
market
willing to pay. Because we were at, I remember once we were selling the accounting package, and I was like, listen, we can't be selling this thing at 15,000 rupees a month. Because the amount of service we're giving on it is ridiculous. Let's go to the next customer and say we'll charge 1 lakh rupees. So my sales guy is hard drop. It's like, dude, I'm going to lose this customer. I said, no, it's okay. Let's go. So, and this guy was like, he turned shades of red and purple and all. And we went to this customer. And I very confidently told him, price is 1 lakh rupees. But he said 15,000. I said, no, that's for the base one. What you want is a the really bells and whistles model. And it was a listed company. So I said, you're too big for us to even service you for 15,000. So it was tough. We signed the one. I remember that time I walked out of this thing and I said, he looked at me and said, Deepak, you pulled it off. I said, no, the point is, we should have always been charging this. It's my stupidity or our stupidity as management of not seeing this kind of an opportunity before. So we basically underpriced this product all this time, and we had not even tried for higher. So at some level, because in the end, the kind of service that was being provided at the time, you needed hand holding, significant hand holding, to be able to take something forward. And some of that would cost you a reasonable amount in terms of manpower. So you can't charge a low price. So these are lessons you learned in real life.
Yeah.
Right? So pricing, technology. So you wanted, one of my partners had bought a house.
Yeah.
We needed to offset some capital gains, so he bought this house in Malaysia.
Yeah.
And he said, so these were 4 houses in one. So there were 4 different entrances to these 4 houses. We said, we'll take one of them as rent because there were 2 rooms in it. Then we found out that's too small. We broke the entry to one, and then we had now 2 houses.
Yeah.
And then we eventually took on all 4. But the interesting part of this whole structure was that you learned about a lot of things. Right? You learned about mostly business along the way. But I think what it taught me was that entrepreneurship is glorified a little unnecessary. Of course, initially it was not glorified at all, because when I told people I started a company, they would say, you didn't get a job at a tech company, you will not apply. Well, it's relatively, but over time, and then we went through 99, 2000, the dot-com boom. And the sad part of that was, we said we don't need funding. Now imagine you're trying to create, it sounds so stupid, right? You're trying to create an India-wide product, beat Tally.
Yeah.
And you want to do this with, whatever funds you kind of save after you got some US projects or UK projects or something like that. That was, over time, it became very stressful to be able to do that. We didn't raise any funding. We didn't even try. And by the time we realized we needed funding, it was past the dot-com boom bust, and 9/11 had happened, and they wouldn't even look at you sideways if you wanted funding. So we kind of realized at that time that this is not going to work out. So the first few years were learning business the hard way.
The unintentional.
Unintentional.
Yeah.
I mean, I don't know, because it is intentional to be an entrepreneur, because you wanted to sign checks.
Yeah.
Right? You want to be the person who signed a check. I hate signing anything right now. It's almost like I have to, because I don't even look at what I signed. Just don't sell my firstborn or something. And as long as you don't do that, I'm fine. But all this stuff was wrong. I remember the first day we started this company, we registered. We had to sign some things. We went to this person's office, and they were apparently supposed to be venture capitalists people, but they were not. They were investing at 10 rupees per share, and we were also investing at 10 rupees per share in a company with no premium for anything. So they own 10% each, and 4 of us own 20% each. The interesting part of this was, we walked out of here and said, let's now go for a movie.
Yeah.
Because now we're entrepreneurs, we can rule our own lives. 7 years after that, we never went to a movie in the afternoon. We said we'll do this all the time. We never did it. Just no time to even breathe. So all wrong incentive or long starting points. But I think you ended up going.
And so obviously that established in your mind that definitely it's entrepreneurship for you. Like I said, corporate rebel, no chance you'll be in a regular corporate job, I would say, like a large MNC, And then there was this time period in between, just before you started like writing and creating Money Yoga, which was the first version, and I would say the origins of the backstory to Capitalmind as a business. How did you segue into financial services? It's almost impossible to believe that it wasn't very organic and innate and intrinsic for you, because you just speak the jargon so effortlessly.
That's an interesting point, because I think
family of bankers, like growing up, dining table conversations.
Well, my introduction to stocks was mostly by dad asking me, because he was old enough, he couldn't read the fine print of the paper. He'd ask me to read which price, what share was trading at, or what anything was trading at. But I was not clued in into anything. I didn't know why companies had share prices
Yeah.
and why they changed every day.
Yeah.
And all I knew was that if it went up, my dad was happy, and if it went down, my dad.
You never read the annual reports, the hard copies.
No,
They used to
I,
get
they used to
collated.
come, but they
Yeah.
sounded like very boring in comparison with magazines that young kids are
Yeah.
interested in. I don't think this was. At best, I think you'd get some coupons some once in a while.
Huh.
And in those coupons, you would have like a discount
Yeah.
coupon to something.
Yeah.
Something like that, but that was pretty much all.
Yeah.
And I wasn't interested in finance at all.
Okay.
If you ask me, I'm the engineering mindset,
Yes.
right? So-
Yeah.
And through college and through it, all you knew about business was it was business.
Yeah.
But accounting, because we were building an accounting software, and I, as a Delphi programmer, I used to also, we built a team to provide services to people who were doing insurance and accounting in the US. So there were companies who had products in that space, and we would use those products to kind of do different things, and as I would build on top of those products. I found that I'm very interested in the accounting side of things. How do you get more on the accounting part? You can look at the stock market. People are starting to upload their
Yeah.
results online. So I got interested in it from there. I wrote my first blog post, I think, in 2004, where the first blog post was, this is about long-term
Yeah.
investing.
This was as money yoga or just something
This
you
was just
wanted?
Deepak Shenoy. It's
Okay.
called the Indian Investors.
Yeah.
And then it later morphed into something called Capitalmind, which
Yeah,
which I changed in 2009. What actually happened when we started off was that there was no meaningful way
Yeah.
for people to communicate to other people about what some of these things. And I was reading blogs like the Motley Fool in the US, and Yahoo Finance, and all of that. I said there's a vibrant community there. We should have something there.
Yeah.
There was Trader G, which is a forum for people who are trading. There was a few investing portals and so on. But I said, you know what, we should do something. I want to write. And let me just write. I started writing. I think writing came natural to me. I discovered all of these skills or talents or whatever they are much later in my life. So, for instance, in the final year of my college, when I discovered I had a knack of speaking publicly.
Mm.
I was comfortable on stage. I could speak, lucid sentences and not stumble too much and speak impromptu for the most part. So that kind of helped me through the Delphi years because I was going to the US and presenting in conferences. But when it came to finance and all that stuff, I was able to kind of give my thoughts in a way that I understood. Which is why I think maybe that's why my writing tends to be popular because I never learned the jargon in the way that was supposed to be learned. So you ask me to explain something technical, I will use jargon. I will use, whatever lead code or whatever that thing is, because I'm just like, oh, you better understand this stuff. If I were to tell you about 32-bit boundaries, I'm assuming you understand what I means and stuff like that. But I don't think I do in finance even now. So if somebody says the unit linked insurance plan, I'll go back, oh, this unit linked means this, insurance means that. So I think that is what drove me to understanding finance from a more first principle point. So I had to search and find information. That was fantastic. The US is such a rich source of knowledge for, and people give a lot of time, devote a lot of time explaining things. The US is the most amazing naming conventions in the world. You take any 4-letter acronym, they will name it in the most beautiful way possible. So,
and what do you write about? What were the first few blogs about? Was it a specific company? Was it about scale? Was it about India macro story?
Oh yeah. So actually, because I didn't.
Do you remember the first 5-6 blogs that you put out? Yeah.
First one was very good, which is about long-term investing. The second one, I think I wrote one post about how companies even get value. I mean, the idea that so what are shares? How does it work? To get this thing. So
I'm guessing public markets was the common theme across.
Markets, in that sense. Mutual funds in a way. Mutual funds very early days. So I used to write a bunch of things around how mutual funds are organized. Great stuff. Online websites to buy stuff was also relatively early. So the sites like ShareCon, IFL, a few others. So there was these were considered new. And the older ones were brokers which you called on the phone. So I was like these new guys because they're tech and this, that. So there was very interesting, different concepts that you could do at that time. So I was explaining each of these things in different ways.
Yeah.
One day I talked about how much insured. I wrote a post in 2006, I remember, about real estate, and which people have quoted for against me and for me. For this is it useful to invest in real estate? The idea was either you take a house on rent and live. So I said, listen, financially, there's no argument. In India, it doesn't make any sense. We need a minimum of a 10 to 20% appreciation per year, which is difficult in
net of the interest rates.
Net of the, And so, assuming the interest is taxed, non-taxed, all sorts of things. So I created this Excel sheet, I put it out there, it's called the real estate calculator. So I got a lot of flack when I eventually got a house. So you told everybody rent house. Financially, I would still rent, but this is an emotional decision. You can't emotionally blame me. It's like
most financial decisions are sometimes.
I was like, why would you? Of course, I could make more money if I ate Maggi every day. But I don't want to eat Maggi. Don't eat better food. So, I mean, at some point, but having said that, I was naive. So, a lot of my posts were coming from this. I'm outraged about this ridiculous thing, and that then you find out why that ridiculous thing exists. And like, okay. And
at what point did you begin to believe law could metamorphose into a business?
To be fair, my first time after I
did you try to raise VC money with the blog? I know there's some stories there.
So interesting. So I'll tell you a little bit more. After I left Agni, and I left it because I had to fire myself as the CEO. Because I was like, I'm holding this company back. Either it goes up from here or it goes to zero. But I'm not helping it because I'm just stagnating the whole thing. I just got married. I had said, okay, now I'm bankrupt. So technically, because I have no money in the bank. Everything, all of my money was money. So I had literally no money when we were kind of shifted into our own place and all that. And then I took up a job and one of my clients at the time, he said, why don't you come and run my India office? So I did business process management. Complex for workflow solutions. We did a very interesting workflow solution, very nice company called crore. We eventually in 2007 sold it. When we sold it, this is when I said, I've been writing on the stock, this Capitalmind, what was the Indian investors blog for a while. Why don't I think of converting into a business? But I don't know anything about finance. So now normal human beings who have like a 6-month-old baby would be like, please
just keep working.
Just work, and kind of, take care of your baby and do things. Not me. So I decided I will pack everybody in a car and we will drive to Bombay and we will find a house to live in. And we will move there. So we sent all our luggage in the car and we were in a truck and we went in the car with a 6-month-old fellow and we drove to Bombay. It was 3 days. And interestingly, the third day the market had crashed 20%. And I had gone to Bombay to try and set up a company that would do algorithmic trading. Because I was like, okay, I know finance, I know algorithms, so I can trade automatically. And in the middle, somewhere in the middle, I met Nithin from Zerodha. And he had showed me these charts and said, if you take the moving average and when something crosses over something, and you do something. I said, dude, this is great. Why don't I code this? I can write code that figures this out. So we wrote this code, then I turned out such things are very popular. They are trend following systems or quantitative trading, quantitative low frequency and there's high frequency trading as well. So we said we need to explore this for India. I moved to Bombay with my partner at the time who also decided to move to Bombay at the same time. Ran this thinking that in Bombay everybody would love this software that we were building. We turned out over there, nobody wanted to even hear the name of algorithm. Because they don't know market research whatsoever. Lessons eventually learned are like, you have to figure out if people actually want what you want. But anyways, we went there, we said, okay, what do we do now? Nobody's buying our product. We went and said, let's write an algorithm and trade our own money. And we didn't care if the market was doing. This is 2008. So the market first fell 20% in January. And then went on to fall 80% by the end of the year. We made money almost entirely through that. Because we were trading with an algorithm that didn't care if you went long or short. And we thought this is perfectly normal, that everybody should just go short when the market falls. And apparently it's not now. And as if I don't know, I know why, but more likely that when markets were going down, you're making money. Once I remember the broker, there was this lady at the broker who came to me and said, don't show in your emotions in any way that you guys are making money. So,
Be very strong. Yeah.
we were in strike. But then, we went to VCs at that time.
Yeah.
We went to VCs before that as well. Perhaps we didn't have the story, perhaps we didn't have the pedigree. I don't know. There was different things at different times, but it was difficult to convince people that this would be something people would pay anything. Then eventually we shifted this over into a place where we're running our own money. We were able to convince a company to buy us, and they said, we'll run PMS with your algorithm. You guys come on board. I said, okay, that's good. And unfortunately, the company went bankrupt in Lehman. So then back to
square one.
So then we said, okay, this is not working. And the first thing that I realized in my first company was that I hate to create something that's a zombie company. That means you could run it, but
not heading
anywhere. So we said, the amount of money we have is too less. We could make some money, but the returns you make on less money are not enough to sustain you. What's the point? We're not getting any funding. We could go and show people our track record. And sadly, at the time, the December of 2008, two things happened. Satyam and that US guy who conned people.
The Bernie.
Sanders,
Madoff.
Yeah.
Okay, Bernie Madoff. Yeah.
So, Madoff, some people's money. So, at this point, when you went to people in India, they were like, no, Satyam falsified its record, so we're not believing you. We go to people in the US and we start talking. I mean, we talked remotely, of course. But they said, I'm sorry, but just because we just saw Madoff. So I'm not going to even believe. But because both of these people had falsified what people had forged records. So nobody wanted to believe us. So we said, okay, it's not a good, let's shut this down. And I didn't want a zombie company, so I closed it. Co-founder moved to Pune, I moved to Gurgaon because life was because there. And then I worked for a hedge fund. By this time, the blog had gotten to a point where I was writing on a regular basis. I was getting more and more people talking about this. And they were talking solely about, listen, you've got to monetize this, or because otherwise it's going to be just a hobby that dies, right? So I said, no, it's not the right time. I said, I'll create YouTube-based market education software. I mean, videos. And people will subscribe to these videos and pay. It was 2011. And I'm like, okay, this is like...
There are a bunch of startups doing that, by the way.
Yeah. Almost all of these are ideas like 10 years before they were ideas. They should have been ideas. I built videos. And I said, okay, I'm going to sell them. And who do you sell them to? Because YouTube didn't have a meaningful
advertising and subscription business.
India's mobile phones data was so expensive that people
no one's watching YouTube or YouTube.
And so you had to go abroad to sell them. Abroad, people were like, why would I look at Indian mutual fund companies? So come on.
Yeah.
So, wrong place, wrong time. Maybe I should focus on the US. Maybe not. I don't know what. But I went again to hunt for funding for this. Again, probably wrong idea. We don't know how to present it. So then I gave up and I said, okay, it's not working. Yeah. I moved back to Bangalore. I worked for a friend's company which was in the banking software space. So I helped a few banks on regulation and a bunch of things like that. And then I had this itch, the entrepreneurial itch is all start another business.
Yeah.
And I remember my friend was asking, what are you going to do? I don't know, but I'm going to, what, this blog has been running for 10 years.
Is Capital your fifth business, fair to say? Fourth, okay.
Fourth. Well, fifth, if you were to consider that I ran the India office of a company that I sold for WNS. Yeah. But I was the
CEO. Including Money Yoga and India Investors and the YouTube educational video business.
Yes. Yeah. In the sense of that.
Yeah.
The
fourth time is a charm.
Fourth time was interesting. I hope it was a charm because the third time lucky they say, but I was like not. And so the fourth, then I said, I started this as a business. I'm going to give this a year, 14 months.
Yeah.
And I said, if in 14 months I'm not able to get this many customers, I'm out.
Okay.
And I said some things. So I did my first 100 customers by this date, which was 1.5 months from my start date. I got 100 customers within 15 days.
This is for the research platform that we have the insights and research.
Yes. So we thought we'll beat Bloomberg in India
Yeah.
and give retail.
Yeah.
price to Bloomberg.
Sorry, small question in between. Did you start from that same Malleshwaram house?
So Malleshwaram House was my partners, which because I left in
Yeah.
2000.
Because I remember your registered office
Was
in the early days was there, right? So
yeah, well, no.
the Capitalmind was originally
Registered in Malleshwaram.
Malleshwaram, or you had an office there?
I had, yes, we had something there. What was that? There was no, our bank account was there.
Okay.
And is there an office there? No, we had a separate office. Money Yoga had an office in near Cunningham.
Okay.
That is where I was living.
Yeah.
And we wanted to set up an office in Malleshwaram, but couldn't.
Okay.
But then we managed to set
Yeah.
up something else somewhere else. So we did a bunch of. There was no WeWork and all of that time. So it was
Yeah.
just more
Yeah.
complex to set this up. But yeah, it had been about for 10 years. So when I started.
So original idea of Capitalmind was the Bloomberg of India.
Original idea was India and research.
Okay.
As paper,
Paid
commentary, paid research. And I went to the even at that time.
Yeah.
Why didn't people pay for research? It's all free anyway.
Yeah.
Maybe, but I don't know. Then why we started in
And
Bangalore?
where the fund houses were your customers?
So
For the research
recently, no,
papers?
I wanted to only do retail.
Retail. Oh, fantastic.
So I said retail. And so you can imagine how
Yeah.
stupid this sounded, right? To anybody. Like one kid who's failed in 3 businesses, not even kid, old man,
Yeah.
and everything, and gone to start a business in Bangalore,
Yeah.
selling to the retail people who never traditionally paid for anything. Research services on stocks and markets and portfolios. Who will even bother? So, okay, maybe you're right. Maybe what I'll fail. If I fail, I'll fail with my own money. Then I put it in. About a year later, we
You
said
had 200
something.
odd customers.
We had nearly 400 customers.
Okay. Paying customers.
Paying customers.
Okay.
So we were like, okay, it's not too bad.
Yeah.
Let's set this up.
At this point, you were just a research house, like you were only sending them paid articles.
Articles, and then we had a small online place that was like a Bloomberg in sense
Yeah.
of the
Yeah.
dashboard of sorts.
Were you publishing your portfolio at this point?
Yes,
Okay.
we started.
That was one of your original USPs. Yeah.
So we said we publish portfolios, not individual
Yeah.
stocks. So we're publishing portfolios, calculating equity curves
Yeah.
and so on.
Yeah.
The sad part of this was that, okay, went to the VC world would obviously look at it as the business that can scale magnificently. But I was like, this is going to scale slowly. It's going to take some time. You have to establish credentials. This is a business where you establish credentials over a long period of time and then you can make money. But also at the same time, I was getting revenue. So it was not like,
Yeah.
then I raised some money from friends and family.
Yeah.
One big round to raise from the VC world. Spectacularly failed. Like I had 5 yeses and suddenly I had 5 no's. So it was like, but it's okay. I mean, I don't think that this was meaningfully bad.
Yeah.
In fact, one of the investors said, "You just a blog." And I think that's fair to say.
Yeah.
But this just a blog can be a
About
business also.
200 subscribers. Yeah.
Oh,
Paying subscribers.
Subscribers and all that. They said, okay, can we do something more and make it a real business? So we set up the research. I raised a small round from friends and
Yeah.
family. I set up the tech part of this business. We scaled up the blog into something more meaningful. We started more content on portfolios, research, added a few more people to the team. Eventually, they said, people want to manage their own money. Want to manage our money, which is, we don't want to manage our own money. So it's a move from a do-it-yourself to a do-it-for-me model. The only way to do that was a PMS. Shrey came in at the time. I met him, he's my founder now. And he said, okay, how much do you need money to kind of, he wanted to start his own business in the field.
Yeah.
And that's when I said, okay.
Let's do this together.
Let's do this together. And we're running in early 2000, a little bit when the markets had fallen.
Yeah.
2000 odd crores in the public markets alone now.
You've doubled your AUM every year since you started Capitalmind.
Except this year.
Yeah, but this year we know the markets are acting difficult. Yes.
Yes.
Over 1,000 clients, 1,500 clients. All word of mouth, zero marketing, all referral and word of mouth.
Mostly referral model.
Yeah.
Marketing, of course, I would say my Twitter is mostly a marketing
course,
tool.
yeah.
I mean, very little paid marketing.
Yeah.
So we've tried. We don't know how to do paid marketing. Because we put some money in the thing, succeeded, and
Yes.
it's gone. And I'm like,
the design. Yeah.
yes. I'm like, who saw this?
Yeah.
And then they say, no, some person.
As a founder, if you don't have CAC LTV problems, trust me, it's a good thing.
I heard about CAC because sometimes we calculate our CAC. What is our CAC? We sat down and worked out. Deepak's time. So. And then, our CAC is 220 rupees per customer. That sounds too less. You're getting 50 lakhs per customer.
Yeah.
You can't be spending only 220. Okay, what's the cost of sending people their forms? Okay, it's another 150.
Yeah.
Okay, let's put that in. 400 not a sum. So, unfortunately, this is all built to
That's
say.
a good problem.
Yes,
Trust me. Yeah.
And lifetime value is also interesting because we predicted that customers would stay for a certain time.
Yeah.
An attrition rate of about 10 to 15%.
Mm.
Now, we do have more attrition during times of crisis and all that. But attrition rates have not been as bad as one might have initially thought could be.
Yeah.
And attrition rates are complex because sometimes people die and that's not attrition in my head.
Yeah.
Because usually the children might actually come and say, okay, we
Yeah.
manage this is our money the same way, or
We want to manage it
situation.
differently.
Yeah, sometimes people separate
Yeah.
and you have issues. Or sometimes people have, so it's not meaningfully different
Yeah.
from, meaningfully like indicative of actual attrition. But also because we have direct relations with our customers, we tend to retain our customers a little bit longer than those that go.
And you stayed true to some of your first, like, let's say, building blocks from the early days, which is skin in the game. You the longest time, I think you still publish your portfolio, right? On what you invest in and portfolio ideals, and as founders, what your capital contributions are.
No, we don't obviously know, but 80% of my net worth probably
is in capital, right? Then now quantitative strategies.
quantitative is, yes,
Yeah.
we still have a lot of quantitative strategies, so we keep be a
Yeah.
we are so I'm an engineer, so I think
Yeah.
I prefer anything quantitative, anything.
And reporting, of course. The way you report is, I think, amongst the best.
Or thank you. But I can't say this myself, but I do think that there is a way to report that perhaps I am just lucky that I'm one of the few people doing it.
Yeah.
Because if you look at the US, it's not like there are any group of people who are Joe Rogan-ing the finance world.
Yeah.
For making it simple and all this. I really think that is missing or has been missing. I think it's also because of the way perhaps that we're taught in
Yes.
school and all that.
Yeah.
Formal language, don't
Yeah.
start your
And
sentences.
also, of course, your origins as a research and insights. I think the blog has not got out. It's definitely helped. Yeah.
Yeah, no, and it's seminal time when you have interesting things like, I don't know, that Nirav Modi episode.
Yeah.
People didn't know what was happening. I wrote something.
Yeah.
People would forward it to me saying, look how nice this person writes. You should learn to write like that. Okay, thank you.
Yeah.
That's my post. But
Yeah.
but in a way, it helped me. I realized something that formal language is not desirable.
Mhm.
You want to be as conversational as possible, even in the text that you have.
Yeah.
The second thing is that people like images when they convey a certain meaning. So you want to prepare your stuff with the appropriate images so that people can make graphic understanding of what you are doing. And thirdly, I think in the end, the person who's read what you write should be one of the three E's,
Yeah.
like Motley Fool says.
Yeah.
Is either educate people, you enrich people, or you entertain. So if you're not one of the three, then you're not meaningfully done anything.
Yeah.
So that's the point.
And of course, speaking about insights and presentation, you speak a lot about Maha trends, which is my favorite part of logging into your YouTube sessions. Talk about, of course, formalization, institutionalization, import substitution, domestic consumption. I'm missing something. Manufacturing, defense.
Manufacturing,
It's part of import substitution. So import substitution, financialization, formalization, domestic consumption. So definitely educating and enriching audiences, I can say. But maybe a little bit on each theme. And maybe we can start with domestic consumption. That's like the biggest of the themes. And since you've had this ringside view over the full decade now, just maybe let's briefly touch upon these four themes. Yeah.
Cool. Okay. So I'll give you the quick summary of this. Basically, it's called Surge India. That's one of our, it's actually a fundamental thing. It's not a quantitative one because you have to do more. So the idea over here is focus on the consumption elements that are changing rapidly. And when I say that, I mean, for instance, tourism, airports, airlines, and things like that are seeing activity that are probably unprecedented and growing at a massive pace, simply because India's per capita income has reached a certain level. The consumption in domestic areas is also driven by a fact that COVID, changed perception. Suddenly, it was not enough that you were alive or healthy because you just died.
Yeah.
And everybody's like, dude, I want my experiences before I die. And then that I think kind of philosophy has moved into let's spend our money rather than saving our money. So India's saving rates come down.
Yeah.
And
50 years low, I think.
50
Yeah,
years
RBI
low,
keeps reminding
which is
us.
very good.
Yeah.
And I think the India saving rate was way too high.
Yeah.
They don't tell you that.
Yeah.
That we are the ridiculous saving rate
Yes.
of 38%.
Yeah.
And why are you saving so that the government can spend? Let the government stop spending, you can spend it properly. I think that's what we want to do. But domestic consumption opens doors because once you create more domestic consumption, you have more domestic producers willing to meet domestic demand. It's in a way like textiles.
Yeah.
If you have certain specific things in India, like salwar kameez or certain men's clothes or certain kind of thing, you will find that it is served by Indian manufacturers or Indian tailors or however those services or products may be. Domestic consumption drives domestic investment into domestic, whether it's called manufacturing or services, is two different things. But I think that's what leads from. And America has found this right from the beginning.
Yeah.
That you drive consumption, things change. So I'm saying that India is actually starting the journey of going from saving to consumption. Now, consumption elements is going to drive a lot more behavior. We are going to want you forever. Oh, you will consume too much. You will create But I'm like fine with that. I would rather have a non-consumption oriented economy creates rich families. Consumption oriented economy creates rich people, which means you and I can come from any background and go and serve other people's needs and we can get rich. That's only because everybody's spending. If everybody was saving, then you would only find that a few rich families tend to own all the money.
Yeah.
So, doing that again democratizes us as a democratizes is a very sad word, but that's the part. So I'll give you that on the.
And I thought on credit fueled consumption as well.
Credit fuel is interesting because credit has always been a huge part of the Indian economy, except it's been kacha. It means it's been from money like
unorganized
that.
unorganized.
So when you move that into the financial
Formal
system,
economy.
you're actually getting financialization, and then the RBI is like, oh my God, we're growing at 50%.
Yeah.
And I'm like, no, you're growing nothing at 30%. It was there. It was just now become formalized. There are pockets of extreme. Instead of bringing down everybody, find those pockets of extremities and bring only those down. But the RBI wields hammer, and therefore you will use it to swat a fly.
Yeah.
So and enjoy a lot of other people. So in that sense, I think you had regulators kind of stymie some of the movements, and in some cases it's a good thing. They've seen a lot of damage in the place. But I also feel that at some point credit growth is inevitable in India.
Yeah.
It's just not allowed, being allowed to happen meaningfully now.
Yeah.
But India is going to be starved of credit for a long.
Manufacturing, defense, especially import substitution.
Yeah. So interestingly, India imports almost everything and makes almost nothing. Yeah, I mean, when I say that, I mean, you of course make the clothes that you wear.
But in terms of value addition.
There is a lot of stuff that, for instance, India is one of the largest exporters of textiles. We make mostly machines.
Yeah.
We used to at some point in time, but all the
We assemble more than we manufacture.
We tend to assemble only from import taken from abroad. The first cars in India were almost exclusively taken as parts from abroad, stitched together to make it back, which sounds like maybe the Rogan cars we have used earlier. And now I think the ecosystem has changed to the point where we're manufacturing a lot more. Import substitution, biggest things are in railways and defense, where the government used to almost exclusively import. And now they've realized after the Ukraine war that listen, we can't depend on other countries manufacturing for us. So why don't we set up this whole thing in-house? So they're adding more and more defense contracts, defense submarines, different ships. All that is being manufactured in India. I think going forward, that's the trend for almost everything. So we're going to be like, if we are manufacturing something in India, let its source also be manufactured in India and downstream and so on. So that's one of the reasons why India had high tariffs on cars. Saying, yeah, you can make your car wherever. But if you bring it to India fully made, you're good. But if you come to India And if you hire people in in your factories, then Indians will learn how to make cars. Some of them will leave and start their own car companies.
Yeah.
I think that's what's driven a lot of entrepreneurial activity. And auto actually is one of the largest manufacturers. So I think this is going to scale because more with Trump, the world is becoming insular because firstly nobody understands what is going on, what is actually trying to see.
Yeah.
And then so but at some point you have an issue because he has an issue with anything that isn't specifically and only benefiting the US, which means if it benefits India and it benefits the US, he's not interested.
Yeah.
So at this point, we're like, okay, listen, we're a big enough market. We can serve ourselves and we should serve us to as much as possible. To that extent, we should allow our domestic consumption to be fueled by domestic manufacturing. So allow process, allow more companies to make for ourselves. We have problems. We have labor laws and
Yeah.
things. But I think that's a big focus area for us.
And speaking about, like I would say, domestic resilience, just the constituents of the financial markets have also changed. And one thing you always talk about is increasing domestic participation, both on the retail we'll come to it a bit, but the institutional domestic investors as well. And another interesting fact about Indian markets is promoter holding, right? Promoters hold what, 45-50% of their own companies, amongst the largest even compared to the US. Of course, private markets, private equity, we have like less than 30 companies we see backlisted, but high promoter shareholding and FII used to be 25 odd percent, probably 18. Where do you think this will head, both like medium to long term? You think like on both on domestic retail as well as institutional participation?
So I think institutions from a foreign investor side will probably come out. If you divide the market, it's 50% promoter.
Yeah.
The remaining 50% has, I'm going to give the broad numbers, 25%, which half of them used to be foreign investors, rest of them used to be domestic, direct equity plus mutual funds.
And the government, I'm guessing, is the last.
No, government is usually a promoter.
Promoter.
So it's in the promoter side of things. But if you look at the way the equations change on this side now, 50% continues to be promoters. But maybe 14 or 15% is FIIs. Another 14 or 15% is mutual funds, close to that.
Yeah.
And then
Domestic
direct
retail.
retail. I believe that domestic retail will end up owning something like 40%, either directly or through mutual funds. The remaining 10% will be held by foreign investors in the long term. It's a good thing, not for anything else, but because we'll benefit from our own growth and at some level the capital. But it will take a lot of pain.
Yeah.
And you won't believe it. Even the first few months of 2025, even though markets are down maybe 12, 15, 20%, domestic investor net invested money versus anything else. So I think from a perspective, this actually adds that thing. When you have a higher per capita income, both your savings and your expenses are higher. That higher is as a factor of 140 crore population. And you get this massive surge in mutual funds. We are still at levels the US was seeing in 2005 in terms of net retail participation. So we have a long way to go from here.
And this would obviously mean with more domestic mutual fund, even in terms of as a VC companies which are going public, then just the importance, therefore, of that in domestic institutional base, right? How will that change the trajectory of these 24, 30 odd companies that are lining up to go public?
Yeah, I think domestic investors now, for instance, I'll give you an example. Zomato, they did a massive thing.
Yeah.
QIP.
Yeah.
They said only domestic investors.
Yeah.
And the reason for that is because they own Blinkit.
Yeah.
And Blinkit might want to eventually own inventory.
They need to bring the shareholding down
to less than 51% or for 50% in order to be able to do this. So I said, okay, if that is the driving force, then you really have no alternative to do this. So domestic investor base is now interested. The institutional investors will be mutual funds and insurance and all that stuff, and PMSs like ours and all that. Many of them participate in anchor issues during the IPO process. PMSs can't, but most mutual funds do. And they're very interested in it because it provides a fresh look into what is otherwise a very boring market, right? I mean, how much more aluminum will you need? And is your aluminum better than my aluminum? But then I can say Zomato services are better than somebody else's. Yeah. So your differentiated technology-based services that are coming out, I think they deserve their place in the sun. Though in the end, they'll have to generate profits in order to be able to be like meaningful. Um, I think the VCs here have the biggest roadmap. If, as I call it, they looked at T plus two. T plus two being, if you're going IPO in year T, think of your exit from that IPO as 2 years afterwards. That's because when you go IPO, everything's locked in for 6 months. Everybody knows this. And if you try to sell after that 6 month blocking is over, people would have sold ahead of you, brought the prices down. We've seen this in the Swiggy IPO, much more. And when you go in to sell, you're actually reducing the price even more. So the way the VCs might actually benefit their own investors is saying, after we go IPO, we'll wait 2 more years. And then we'll give you the money because that might give you enough time for that company to prove itself. And the public markets are very finicky, but they love integrity and truth. So, honestly, a lot of companies in India are not known for integrity. But I think these are more easily imbibable in a VC run company than they are in a traditional family business. So therefore, people are willing to give them much money. More and more of this will come, and the VC exits into the Indian IPO market will only increase. So, but then I'm saying that because that will keep me in business.
Yeah. So I want to quickly segue into your ambition of becoming a mutual fund house, and congratulations on the in principle approval or the preliminary approval. What's it in principle? Take us into the segue or the graduation from PMS to mutual fund house, and one of only 4 that have recently got their in principle approval, not final approval, but in principle approval. Take us that journey and what being our MF fund manager will look like.
No,
and what is the part of the opportunity that excites you the most?
Okay, so this is actually quite where the excitement actually goes to, I think this is not an easy thing to sell again because you're the 46th fund house.
Yeah.
So the 4th in Bangalore,
Yeah.
if we get one license. There's Navi Grow and Zerodha. But we, what's exciting about this is that this PMS is a individually managed account. So 1,500 customers have 1,500 accounts in manage. If I have a mutual fund, each scheme is pooled in. It therefore requires a lot more regulation. So you have 80% regulation, 20% investment. But it's good because regulatory compliance keeps everyone on their toes and also ensures that the customers, there's been no, for instance, no default in mutual fund case meaningfully in the last few years. Other than maybe a problem at Franklin Templeton, which eventually did get solved. You've not had any glitches of any major sort. So people trust mutual funds almost very easily. The second big thing is the investment potential that it provides us. I can invest in a lot of things. I can invest in stocks. I can invest in commodities like gold and silver. I can do debt directly because debt is a pain in the PMS. It's also not tax friendly. And I can do foreign equities if RBI gives us more permission. We can do more. Right now, you can call limited by an RBI. But this landscape is only provided as mutual fund. It is not available to a PMS. It's not available to any AIF also to a certain extent. I think that is what excites me a lot in the sense of saying we can do a lot more. But in this process of India getting more financialized and formalized, I feel that a lot more money will come into mutual funds simply because they are the easiest way for you to invest in a diversified portfolio of say 100 or 50 or 100 stocks without having to take individual decisions of how much I have to buy in each stock and all that. Let the mutual fund manager manages. And you can buy this in increments of 500 rupees. So what's there to not like? And my point over here is, can I be a small part of this insanely massive industry? And if we go to, let's say, from 15% of GDP to 25% of GDP, we will hit about 150 lakh crores in mutual funding in 2032 or 2033. And if I'm less than 1% of it, I will be 1 lakh plus crores. It's an equation that we would love to have. But we want to provide meaningful products, of course. We want to provide meaningful services. We don't want to do something that is against the customer interest or primarily to fuel out commissions. So we've also worked it out in such a way that our business plan does not expect too much profitability as a percentage of the amount we manage. But as a business, we're talking of 50 to 70% plus return on equity. And perhaps that more than 75% gross margins. Because in the end, if you're using a lot of tech, you will end up using a lot less in terms of people. Your scale does not mean that you have to keep adding people and so on. All large mutual funds today, have that advantage, and I think going forward, it's going to be even bigger. So, I'm very biased because I already put my foot in. Right? So, it's also a very difficult field to fund, which would have to raise funding internally. But I think the issue is because the regulatory pressure was so intense. And to me, it's like, isn't it a more? Because if you think about it, there's so much regulation and you're in, then isn't that
Hard to
good
get
for
out, and the ones who are in have a advantage to scale it.
to scale? Yeah. So to me, it's like that. But then I think, I mean, at this point, it's easier sometimes to sell to customers than it is to investors. I'm not saying that it's a bad thing because they're different mindsets. A customer will use your product and can gauge you very instantly. The investor has to gauge how many such customers will use your product. It's not easy to go in and say, listen, I'm a guy with no finance background who just writes a bunch of things about stocks and or about the markets. And I'm now earning a 2000 crore AUM in the first place because I shouldn't exist. And because I exist and now I want to get to 100,000 crore plus, I sound a little more crazy. But I think the crazier you are, the better it is.
And where do you think SIPs will reach? Well, we have about 2 billion a month now, 80 million SIPs. I think average transaction value has stayed flat, 2,700 if I remember right, 2,500 to 2,700. You're betting on that going up, or do you think 80 will of course 3x in the next 5 years at least? But what are you betting on?
So interesting. You're saying that 80 million SIPs are on or
80 million accounts. 80 million accounts, but average transaction value has stayed flattish at 2,500 the last 5 years.
So they're roughly about $2 billion in SIPs. This will go up over time. I think this will go up because of India getting richer.
Of course,
and more mutual funds also coming into the the biggest thing here is with technology. Technology has changed this game that you need not even talk to me. You can analyze Capitalmind Mutual Fund's performance if it were a mutual fund. You see its performance on a website that is not owned by me, not even managed by me, not even advertised by me. It is a completely third-party website which gets all this data, publishes the information. You could buy that mutual fund on a platform that is not managed by me, not controlled by me. It's a third-party website which gets automatically commissions from us if it has the thing or does direct. Either
that ticket size being as low as 500.
500. And so I have no hold on this ecosystem. I can't even stop them from going if I wanted. But I get access to that ecosystem. And so in that sense, India's growth is sometimes despite the effort. You need to have strong understanding of what it takes to be the customer. If they say Capitalmind Mutual Fund, they should know there's a company called Capitalmind we can trust. So it's not a fly-by-night operator that comes in. But once you've achieved that, the infrastructure in the system is awesome to be able to do it. So I think SIPs will work, but the bigger thing I think is that lump sums. And the lump sum will go up significantly. I'll give you an example. The USBCs, at some point when you fund your company, you want to make sure that they're invested in the right kind of, they've got the excess cash in the right kind of business. We find that a lot of the world around banking is now moving towards if you don't have 100 crores, you don't want to talk to me. But what do you do with the guy who has 10 crores of excess cash? This guy is an engineer like me in 1996. I wouldn't know what to do with 10 crores if you gave it to me, but keep it in my current account. And I don't earn interest on it. Until somebody comes to me and says, Deepak, if you had just put this money somewhere, you would have got 70 lakhs in interest. And 70 lakhs is 2, 3, 4, 5 business salaries. So I'm like, why am I not doing this right? The more people that start to realize this, the more people will financialize. And it's happening in front of our eyes right now. We are seeing people get more efficient, move to I say, forget this, keep your money in your bank account for 5 days, Monday to Friday. Friday before 12 noon, give your money to a mutual fund, it's called an overnight fund, and instantly place an order that allows you to retrieve your money back by Monday morning at 9 o'clock. So you're not going to use the money on Saturday or Sunday, most of it. So, and even if you do the other ways to manage that stuff. For these 3 days a day, 3 out of 7 days you get interest, you're getting 7.5 or 8% in general in the market. 3 out of 7 will give you 4%, or 10 crores will give you 40 lakhs. 40 lakhs is still maybe X% salary. They're not in Bangalore, but so, but I just say that I think just this math will percolate down to people in India. India is very good. I don't know if you've seen Uber drivers calculate the interest on their loans. They give each other, buddy and all that stuff. By the end of it, you know that they're focusing on that last 2 penny. I'm like, if India is like that, then they're going to be like that with their money. They're going to want to invest. Even if it is in safer avenues or different avenues. So tomorrow mutual fund will give you a pathway. Hopefully at some point you may invest in crypto if it's a legalized asset class. But at some point there a simple way to say I want to invest in real estate. There's a product in mutual funds that can invest in real estate. Also things like that. I think this is where the future of India is. Glorify this too much, but I should actually distribute. But it's a very tough field. So all of the people who are listening to this podcast who want to become our competitors, it is just too tough. There's no money in it.
But interesting you said lump sum over SIPs. I think the SIP story is also oversold so much, especially now with the news that you want to quickly chime in on people cancelling and discontinuing SIPs.
And this is a specific feature.
Yeah.
I think SIP cancellations are always a feature of.
I think it's the flip side to technology and formalization that it's as easy to discontinue and cancel as well.
Interestingly, it's not. Because to cancel SIP takes more steps than it is to start an SIP. So to cancelling an SIP requires a lot more effort because you have to first find the SIP and cancel it. And then you have to press something, then OTP, and then say server is busy. And sometimes it's the first message so that you let him try again and then cancel. So sorry, I don't mean to demean the issue, but I just say that it's more in general difficult to cancel products than it is. But SIPs lapse. So you start a 6-month SIP, your SIP is on for 6 months, and they lapse. And then if the next time is a bear market, you're like, let me wait for a few months. So in a bear market, you generally see that market SIPs will go down. And but I'm not seeing it's the first 2 days of March when we're talking about this. And the SIP flow is so strong because mostly people give their money in the first and second of a month. This time the first and second were Friday and Saturday and Sunday. So all the money came in on Monday and Tuesday. And on Monday and Tuesday, the domestic investors are nearly twice the sales, like they bought 2 times whatever the foreign investors have sold, and they've sold 4,000 crores, these guys about 8,000 crores. So it's more, I think, a function of people saying, listen, my SIP is on, let me just stay on. So yes, they are falling in terms of total investment, but the absolute amount that is being invested has not gone meaningfully down. So the lump sum component part of your total investment is actually higher than your SIPs. Which is how it should be, because this means people are looking at this market and saying it's an opportune time to put in more money. And instead of just going the SIP route, I'm going to just put lump sums. Talks of a more mature market, because people will disagree with you, they're saying, no, the overvalued market is that. But in the end, your savings are your savings today, right? You got to make them work for you. And you're not like this financial wizard who said, I know exactly when the market will bottom out. Somewhere it's fallen more. Let's do. That's the thought process people are having.
So quick thoughts on the secondary that's evolving around loan against securities. We have to cover last as well. How do you think that will evolve? And I know that there's an F&O issue of borrowing and investing as well. But quick thoughts on.
I think loan securities are a very good product. I'll give you an example. If for instance, you need to pay something, taxes, this, that, and you have a bunch of mutual funds. Sometimes when you sell those mutual funds to pay those taxes, there is a tax on the gains you made in those mutual funds in the first place. So the minute you made those gains, redeeming it, paying the tax, and then paying whatever else you have to pay for is actually counterproductive. Instead, you might want to take a loan against that mutual fund and use that money for a very short period of time. So I think that is a good use of LAS, and it's becoming more and more electronically available. So it means but there is a downside. So people using it for no kind of this thing. But I think that's just natural. If you didn't feed them through loan against securities, they would get the loan through somebody else because that's how the market is. I personally feel this is also an underserved market. Loan against securities is one of the lowest absolute amount loans given by the banking system. And most of the NBFC loans against securities are to promoters of companies that are public when they want to secure their loans against some assets that they've got. So I think that would therefore make it not a very large number right now. And I think people should go up. I'll tell you why. What did RBI not like? Unsecured loans.
Yeah.
So a loan against securities is secured by definition. So if I ran a business and I had a bunch of mutual funds, instead of selling them, I took a loan against them, I would actually have a more secured loan than anything else. The guy will give me a lower interest rate. So people at some point used to tell you should buy property because in case of a crisis, you can get a loan against a property. I say, well, if you're investing in mutual funds, you can loan against a mutual fund. Think of it as the loan against. You don't sell the property when you're in a crisis. So use the loan against property concept and say the loan against securities and use it for that time. And I mean, I would say this is a fledgling market. And since we are not in that market, I say all the competition there is good.
You're creating more underlying assets for folks to leverage against.
But I think this is great. I mean, it needs to be advertised very carefully. Because if you do it wrong, you will get all the wrong kinds of customers who would blow up their money using it. But if you do it right, I mean, like for instance, I would much rather pay that Amazon's 3-month EMI with a loan against securities. Than I would with an unsecured 14% loan. I mean, I find that an 8% loan is far more efficient for something like this. But even then, I think for a lender, it's far better for me to offer you a loan on Amazon. If you were somehow securing it also, because I'm not going to take back your TV if you haven't paid your loan, right? Because I don't know what to do with the TV, and B, it's a pain to get your TV back. Whereas if you have loan against securities, you have electronically mortgaged it to me, and I can electronically take it away and sell it. So you can keep your team.
No, that's fantastic. And on that note, segueing into our last question, which is, I would say, my favorite. What are your reform recommendations? If you could be any person you wanted to be.
I know it's sensitive because
yes, exactly.
So
any reform recommendations that you are looking forward to maybe or that you wish we had?
So I think we've done a bunch of recommendations. For instance, in the US, there's something called a 401k account, which is basically
your PPF
retirement
equivalent.
But the difference over there is inside that account, you can buy whatever financial instrument you want. So it's an account on which you can actually say, I'll buy a mutual fund, I'll buy a stock, I'll buy whatever it is. And any dividends that are received are tax free because they're sitting inside this pocket account. And there's taxes deferred to a point when you exit. And when you exit, you're taxed as if it's income. It's not like it's capital gains, it's income. So I say we should have a product like this. We call it Mira retirement account, my empowered retirement account. The idea over here is use a 401k style structure, but don't create PPF and PF and NSC and NPS because these are products with individual managers. Instead, you've got a great, vibrant mutual fund universe. You've got a stock market universe. You've got insurers and other parties. So within this, let them have FDs. Let people have FDs. Let people have any securities product like a mutual fund, insurance, or whatever they want. All of the gains made by either selling or buying those mutual funds becomes tax free. I think the problem with this is it threatens the EPF4. It threatens the NPS because now they have become big behemoths and they don't want to give up their space. But I think we should give more power to the individual and therefore, trust this thing more. Similar reforms, I think, like for instance, they've done this in the VC industry in some way. The government has said instead of supporting startups directly, we will give money to VCs. It's a fund of funds. So we trust the VCs to do the right thing. It's a great idea. You're doing this because you don't have the expertise to do it. You're giving it to people who do. And because now you're giving it to VCs, it's not like 5 dynasties or families who are getting all this money. So it's like more democratized in that way. You can do this with individuals as well. I think we can, and I think the government is doing a great thing by cutting taxes and allowing people to spend the money. Rather than the government saying we'll collect more and more tax and we will spend. Because the government spending, no matter how hard you try, is inefficient at its core and perhaps misdirected in a lot of ways. For instance, I think giving free food is noble as a concept, but it provides no benefit to the economy in the long term. It forces people or it empowers people to think that I don't have to work for food. if that's all I need. At some level, that is a bad thing. The thing that I would change perhaps from a regulation perspective is that we need to make regulations a lot simpler. Rewrite, rethink how things do, and things have evolved.
Yeah.
We are now a big player in the international space. I think if you were to adopt more of the international thinking on some of these lines, and also something that's progressive, like for instance, we have leapfrogged the payments systems in almost all of the developed economies and built instant payments, stuff that is stuff of dreams in the US or even in Europe in many cases. Whereas over in the regulated sectors like insurance and stuff like that, you can't even breathe without getting regulatory permission, right? So at some level, you have to have you want to build manufacturing, but you have extremely obsolete labor laws. I completely understand the concept of a minimum wage, but why do I need to keep an earthen pot of water in a factory? At some level, there is a disconnect, right? So you want to move these and reduce the power of the labor commissioners. You only increase them.
Yeah.
So today you get a GST notice, you're worried because you're not thinking, have you done the right thing in GST? Because even if you have, somebody needs to get paid. That's the problem that we've created, is we are empowered too many people to make arbitrary decisions. And our laws should reduce that in general. And I think this is across the enterprise. We will have abuse if we lighten laws.
Yeah.
But we can handle abuse by broad anti-abuse laws, rather by saying, if you take your left foot inside a house, then you need to have license to do that. And so that, I think, is the thing I would change.
On that note of shedding finally the license, Raj, I think thank you once again so much for joining us at Waterbridge's That One Idea. Absolute delight as always, Deepak. Thank you once again.
Thank you, Anjali. Thank you. I talked too much. You have to stop me sometime. But thank you so much. It was great to be here. All the best.
Likewise, enjoyed the conversation.